Imagine a world where your trades happen, like around the clock, driven by pure, unemotional logic. Reacting to market shifts faster than any human could possibly blink.
It sounds almost futuristic, doesn't it?
It really does. But what we're talking about today isn't science fiction. It's the very real, rapidly evolving landscape of AI-based day trading.
Yeah.
So this deep dive is all about unpacking how artificial intelligence is fundamentally transforming how both individual investors and these huge institutions approach the lightning-fast world of short-term market moves.
And to help us navigate this pretty dynamic subject, we're drawing heavily from a really excellent source, the paper AI-Based Day Trading, How It Works, plus Platform Comparison.
Okay.
It's authored by Lev Modin of N5 Digital Inc. And what's particularly valuable about his work, I think, is how clearly and practically it breaks down this complex field and makes it incredibly accessible for our discussion today.
That sounds like a perfect springboard.
Yep.
So our goal today really is to cut through the jargon, get behind the curtain of AI and day trading, understand the mechanics, explore the tools that are available now, and maybe most importantly, figure out the differences between, simple rule-following AI and those more advanced learning algorithms.
The really smart stuff.
Exactly.
Yeah.
By the end, you should have a really solid grasp of how AI is shaping modern day trading. So, yeah, let's get into it.
Okay, so what's interesting is how the core definition actually simplifies what feels like a super complex topic.
Right.
At its heart, AI-based day trading is just using artificial intelligence or these algorithmic systems to automatically make trading decisions.
So placing buy and sell orders without a human clicking the button.
Precisely, without direct human intervention, all based on a set of predefined rules or strategies. And these rules, they can be set by you, the trader, or sometimes they're sort of embedded within the platform itself.
It seems pretty obvious why someone would want this, but what are the main reasons traders are jumping on this, beyond just, automation?
Well, it boils down to a few critical advantages. First, these systems can monitor price movements in real time. Constantly.
Yeah. No blow.
Exactly. They react instantaneously to market signals, something, no human can consistently do. And a huge one, especially for retail traders, they completely eliminate emotional decision-making.
The fear and greed problem.
Totally. No more fear making you sell too early, no greed pushing you to hold on too long. It's supposed to be pure logic aimed at capitalizing on those really short-term market fluctuations. Speed and consistency, really.
Okay, so how does it actually work, like step by step? I get that there's still a human element involved up front.
Absolutely. It starts with what the paper calls human-defined general rules. This is where you, or whoever is operating the platform, defines the guardrails for the AI.
Setting the boundaries.
Yeah, telling it what it can and cannot do. You're setting the whole strategic framework.
So the human is still key in setting those initial parameters.
Yeah.
How specific can these boundaries actually get, though? Are we talking broad strokes, or can you really dial it in?
Oh, you can get incredibly specific. Like, you can tell the AI exactly which assets to trade. Maybe only S&P 500 stocks or, just BTC USDT in crypto.
Okay.
You define when to trade maybe only during market hours, say 9:30 a.m. to 3 p.m., to avoid weird after-hours stuff. You set a maximum drawdown, like how much you're willing to lose before it stops.
Crucial risk management.
Definitely. You can also specify technical triggers, things like only buy if the RSI is below 30 and the mass ED crosses over, that kind of thing.
Wow, okay.
And naturally, you dictate risk-reward ratios, leverage limits a big one, and position sizes. These rules make sure the AI operates within your comfort zone and your risk tolerance.
That's fascinating. So once those rules are set, the AI engine takes over and executes within those boundaries. It sounds like even with the rules, it's not just static. How does it actively work? What's going on under the hood?
Right. So within those rules, the AI engine is constantly working. It's monitoring markets in real time, analyzing technical patterns, indicators, volume spikes. Some even try to read market sentiment.
Sentiment. Interesting.
Yeah, though that's trickier. Once your conditions are met, bam, it automatically opens trades. It also sets and adjusts stop loss and take profit levels dynamically.
So it manages the trade too.
Exactly. And it closes positions based on the exit logic you gave it, or maybe if new risk conditions pop up. And just to clarify, some systems are totally autonomous once you hit go. They just run.
Set and forget, almost.
Kind of. But others are designed to allow human approval before any trade execution. That gives an extra layer of control, which might be good if you're just starting out or feeling cautious.
That makes sense. And this idea of natural language input, that seems like a big step for accessibility. The paper gives some really clear examples.
It does.
It's like telling you, only enter a long trade if volatility is below X and RSI is above Y, or no trading around major news. That's pretty cool.
Or even programming something like, if a trade goes 10 pips in profit, move the stop loss to break even.
Right. Or just exit everything by 3:50 p.m.
Mm-hmm.
Being able to do that in plain English, like on platforms such as capitalize.ai, that really opens it up, doesn't it?
It really does. It democratizes some of the power that used to be mostly for the big institutional players. But, like any powerful tool, there are definitely pros and cons, two sides to the coin.
Okay, so let's talk advantages first. What are the biggest wins for someone using AI in their trading?
Well, the most obvious one is 247 execution. No fatigue. Humans need sleep, coffee. AI doesn't.
Can't argue with that.
Then there's the complete lack of emotion. Decisions based purely on logic, removing those biases like fear or greed we mentioned. They respond instantly to changing market conditions way faster than a human.
Reaction time is key in day trading.
Absolutely. Plus, these systems let you backtest and optimize strategies really quickly using historical data. You can tweak things and see how they would have performed.
That's powerful for refining your approach.
And for the more ambitious, they enable complex high-frequency strategies that would be totally impossible to manage manually. The thought of an AI trading while I'm asleep, that's hugely appealing. I remember once missing a perfect entry because I stepped away for 5 minutes.
Oh yeah, we've all been there. That just doesn't happen with AI.
Exactly.
But what about the downsides? What are the pitfalls? What should traders really be careful about?
Okay, the big one, and it's a serious concern, is the risk of overfitting to past data.
Meaning
Meaning an AI might get so perfectly tuned to how the market behaved historically that it performs terribly when faced with new, unexpected conditions.
so it learns the past too well, but fails the future.
Precisely. It's a reminder that markets aren't static, they evolve. An AI trained perfectly on yesterday's data might be useless, even dangerous, today. The real challenge isn't just building the AI, it's building one that stays robust when things get weird and unpredictable.
That's a really crucial point. What else?
Then there's the black box issue. Sometimes the AI's logic is so complex it's unclear why it made a certain trade. If it makes a big mistake, figuring out the why can be tough.
Hard to fix what you don't understand.
Exactly. Also, big market shocks or sudden crashes can confuse AI that isn't trained for those extremes, leading to unexpected losses. On a practical level, some platforms can be expensive or just really complicated to set up.
Right.
And finally, this is vital. Using too much leverage with AI can lead to massive losses, super fast. The AI speed can amplify mistakes if your risk isn't managed tightly. Leverage is dangerous, AI or no AI.
Yeah, leverage is always the double-edged sword.
Yeah.
So given these pros and cons, what does the platform landscape actually look like? I'm guessing there's a lot of variety.
Absolutely. It's a whole spectrum. You've got beginner-friendly tools, super sophisticated institutional platforms covering stocks, forex, crypto, you name it.
So what should people look for when comparing them?
Key things are which markets they support, the level of automation, how much control you have versus the AI, the actual AI capabilities. Is it just rules or does it learn? How easy it is to use, and crucially, how much you can customize your own strategies. The source actually breaks this down nicely by trader type.
Okay, can you give us a few examples, like who uses what?
Sure. For, say, a beginner or someone who doesn't want to code, platforms like capitalize.ai, 3 commas, and PNX are often recommended. They have intuitive interfaces, pre-built bots, or that plain English input we talked about.
Makes sense.
If you're a stock trader wanting AI tools, Trade Ideas and Tickeron get mentioned for their specific AI features focused on stock analysis and finding patterns.
Got it, Klepto.
For a dedicated crypto day trader, 3 commas, PNX again, and maybe Stoic are popular choices, often with crypto-specific bots and features.
And for the techier folks.
Right, for the more tech-savvy trader who's okay with some coding, you've got options like MetaTrader with its expert advisors, EAs, Quant Connect, and the Interactive Brokers API. These offer much more customization and control.
And the big institutions.
They might use something like AlgoTrader or Quant Connect again, but maybe the enterprise versions with more heavy-duty features and support.
Okay, that's a great overview. So wrapping up this part, the big question. Should you, the listener, use an AI trading platform? When does it make sense, and what are the final warnings?
You should definitely consider it if you want consistent, emotionless execution. That's a big draw. Or if you have a specific trading logic you want to automate.
Like a strategy you've already defined.
Exactly.
Yeah.
Or maybe you just don't have the time to watch the markets all day. It can also help if you're looking to scale up your trading or run multiple strategies at once.
But the cautions remain.
Absolutely crucial. AI is not foolproof. Robust risk management is still essential, maybe even more so because of the speed involved. Be really wary of those black box systems where you don't understand the logic.
Know what you're using.
Yes, understand it. And if you're building custom strategies, backtest, backtest, backtest. Rigorously.
Hmm.
Across different market conditions, not just the easy ones, before you put real money on the line.
Sound advice.
Oh.
Okay, that covers the basics of AI trading really well. But you mentioned earlier, and the paper has this appendix, there's this whole other level, right? The learning algorithms.
Yes. This is where it gets even more fascinating, potentially game-changing. It's the difference between an automated tool and something closer to, well, actual intelligence.
So what's the core difference? How are these learning algorithms fundamentally distinct from the rule-based stuff we've mostly talked about?
Okay, so the rule-based AI, like we discussed with capitalize.ai, for example, just follows fixed logic. If X happens, then do Y.
If RSI 30, then buy.
Exactly. It executes instructions perfectly, but it doesn't learn or adapt on its own. It's basically a sophisticated if-then machine.
Got it.
Now, the learning algorithms, that's different. First, you have machine learning, ML. Here, the AI learns patterns from huge amounts of data and can actually adapt its strategies based on what worked or didn't work historically. It improves.
It gets better over time.
Potentially, yes. Then there's deep learning, DL. This uses complex neural networks, kind of like a simulated brain, to find really intricate, non-obvious relationships in massive data sets. It might spot patterns humans miss entirely. And maybe the most interesting for trading is reinforcement learning, RL. This learns the best strategies through trial and error, getting rewards for good outcomes and penalties for bad ones, like teaching a dog tricks, but for market profits.
So it learns by doing, essentially.
Pretty much. The key takeaway is that platforms using ML, DL, or RL can adjust and improve based on actual market performance. They adapt. That's the next level, introducing genuine adaptability into the AI.
That's a massive leap. So which platforms are actually doing this? Which ones go beyond just static rules?
Well, the source points to a few key players for this advanced stuff.
Right.
QuantConnect is highlighted because it offers full ML support using Python. That makes it ideal if you want to build your own custom deep learning or reinforcement learning strategies from scratch.
Needs coding skills, presumably.
Oh, definitely. Then there's AlgoTrader, which supports Python and R machine learning plugins. It's more enterprise grade, but allows integrating these adaptive strategies. The Interactive Brokers API is another route. It's very open, letting you integrate almost any MLDL tool you want, but again, you're doing the heavy lifting on the coding side.
High flexibility, high technical demand.
Exactly. Even MetaTrader 5 with custom EAs can have some limited ML support if someone codes learning systems in its language, MQL5, or connects it to external libraries like TensorFlow.
Interesting. Are there others that sort of adapt but maybe aren't full ML platforms?
Yes, there are some in-between cases. Tickeron's Triton AI uses pattern recognition, but also incorporates backtest learning. So it adjusts its models based on how well patterns have worked historically.
So it learns from the past results of its patterns.
Right. And Trade Ideas, with its Holly AI, uses a probabilistic approach. It adjusts its daily trading models based on the historical success rates of the patterns it identifies. So while you, the user, aren't coding the ML, there's a form of daily adaptation happening under the hood.
Got it. And just to hammer home the distinction, which platforms that we talked about earlier definitely don't have these learning capabilities?
Right, good to clarify. Capitalize.ai, as we said, uses natural language processing for rules, but no ML. The logic stays fixed based on your instructions.
Simple and predictable.
Exactly. And popular crypto platforms like 3 Commas and Pionex are primarily rule-based bot platforms. Great for automating specific strategies, very popular, but they don't learn or adapt based on changing market dynamics over time.
Okay, that distinction is much clearer now. So if I'm listening and trying to choose, how do I decide based on wanting or not wanting that self-improving learning capability?
It really comes down to your goals, your comfort with complexity, and frankly, your technical skills. If you want full machine learning flexibility, the AI truly adapting via DL or RL, then you're looking at QuantConnect, the ID API, or AlgoTrader. But be ready for a steep learning curve, probably involving programming.
The deep end.
Pretty much. If you want AI with daily pattern adaptation where the system tweaks itself based on recent history without you coding it, then Trade Ideas and Tickeron are in that category.
A middle ground, maybe?
Sort of. And if you prefer predictable, rule-based automation with no learning element, which is often simpler, more transparent, maybe safer if you're newer, then capitalize.ai, 3 commas, Pi and X are excellent choices for executing well-defined strategies. So wrapping it all up, the core decision for you, the listener, is really this. If your main goal is deploying AI that actively improves and adapts its strategy over time,
The learning kind.
then you need to look at platforms supporting machine learning models like Quant Connect or maybe using the IB API. But if you prefer predictable fixed rules that you define, then the simpler rule-based AI platforms like capitalize.ai or 3 commas are often a safer bet, especially for newer traders. They're still incredibly valuable for that consistent, emotionless execution of your specific strategy.
That makes a lot of sense, and it leads to a final thought, doesn't it? As AI continues to learn and adapt, maybe even faster than the markets themselves sometimes.
Yeah.
How might this fundamentally redefine what it even means to be a trader soon?
Will the best traders be the ones who understand algorithms more than market fundamentals? Or maybe both? We've only scratched the surface of what's possible, and frankly, what the ethical and structural implications might be.
Big questions.
Definitely something to think about. We encourage you to keep exploring how these self-improving algorithms might shape other areas of life too, not just finance. Until next time, keep diving deep.